There's never a lot of new listings in January. Like seasonality wise, for people that don't know, December and January are the slowest months for new listings. So we don't expect there to be new listings. But it becomes a problem when there's a bunch of buyers that are out there submitting, their mortgage applications. I'm ready to roll and there's nothing for sale.
Alrighty, folks, we are in really what is the first full week of 2024. Last week started off with a holiday. A lot of people made it an extended break. So we've got to ask Matt, the mortgage guy, what is going on in mortgage? Is it crickets? Is it ho-hum? Or have things just gone bonkers? What's going on?
I mean, I always like looking at it, my personal business, what I'm seeing, what I'm feeling. And then you can look at the data that's out there nationwide, right? Mortgage applications, the number we both saw this morning, up 9.9% this week. And I definitely feel it. Last week, when we had the New Year's holiday and a 4-day work week for most people, it felt quiet. And part of it is there's not a lot for sale. But for as quiet as that week was, this week, Mike, has been crazy. The whole team is bleeding out of their eyeballs, more applications than we know what to do with. And so I think that the buyer demand, from my point of view, is out and out there running fast. The problem is January supply, like there's never a lot of new listings in January. Like seasonality wise, for people that don't know, December and January are the slowest months for new listings. So we don't expect there to be new listings. But it becomes a problem when there's a bunch of buyers that are out there submitting, their mortgage applications. I'm ready to roll and there's nothing for sale.
It almost feels like we're repeating a movie that we've seen before. Kind of feels like. I do ask because, again, you'll get to see in these mortgages what people are looking for. Is it, if you put the median at Sacramento at 500, I'm rounding for easy math, what percent is below 500 purchase and above, right? I guess what I'm asking you is, have we unlocked the move-up buyer? Do we have some people selling and then they're moving up to the bigger? Has that started yet? Or is most of this first-time home buyer mortgages?
You know what? I think it's more first-time buyer than it is move-up for sure. But I will say that some move-up buyers have entered the market. I talked to a data analyst from BlackRock yesterday, who I talk to probably once a month. And he was asking me, they're studying all kinds of weird data. And he was looking at data that showed that a lot of people with bigger loan amounts and higher credit scores were paying off chunks of that equity early with whatever data they're scraping. And I told them, I have the answer for you. The move-up buyers that are moving up are saying, I want to go find the home. There's not a lot, so I don't want to list this house and be in a rush to find the new home.
Right.
But I'll buy it. Once I close on that, I'll clean up this house and I'll sell it. I'll take my net proceeds and I'll put it towards the new house, and then I'll recast that mortgage. I've had that conversation more than ever. And it's funny because when you look at the data, you're like, why are these higher loan amounts? Why are these higher credit scores? That's the move-up buyer, right? The move-up buyer
That's very interesting. So I just want to repeat what I think I heard. So for 20 or 30 years, my research of move-up buyers was they would list their home they're in. They would at the same time start shopping for another one. They would go into contract on their home. They would go into contract on the next home. And there would be some kind of marriage of the dates, right? There would be some overlap, but basically equity to equity.
Right.
What I think you're telling me now is it's so hard to buy that nobody wants to sell until they've already bought.
Right.
And then once they close, they'll list their home. They'll move into the next one. They'll fix it up. Then they'll sell. Then they'll take the equity, pay off or pay down, and then recast the loan. That's what I think you just told me.
For sure. And it's so popular that companies actually have products around this. Buy before you sell. There's a company out there, HomeLight does it. The loan store who I work with does it through HomeLight, where they say, hey, Mike, you've got this $500,000 home to sell. We'll come and give you a price, a guaranteed price.
Okay.
We'll allow you to buy the house you're purchasing forward without including that in your debt ratio. Consider it already sold, because that's the problem for most people is they can't qualify for the new one with the old one still on there. And you buy this home. If you don't sell, we've already agreed. We'll give you 500. Let your agent list it. Okay, you sell for 530. Good for you. You've got that. You pay a 1% fee or whatever that fee is for that guarantee, but it allows you to buy forward without that in the debt ratio. And quite honestly, when I think about it, think about the conversations I'm having, the people that are moving up are pretty well to do. And there's no hiding that. It's not the move up buyer in 20 and 21, Mike. I could tell somebody who was making 80 grand a year, check this out. You've got this mortgage on this house at 5%. You sell this, take 100 grand in equity. You're going to buy a bigger house with a lower payment at 2.85.
Nicer house, less of a payment. Sign me up.
That no longer exists.
No,
now,
that doesn't exist.
People that are buying are like, you know what? Pregnant with twins, busting at the seams. We have to move up. But the good news is combined income, we make 265 between the two of us. We can qualify. And so the demographic and the type of buyer that's moving up has definitely changed. And so that's some of it. But back to your original question, the vast majority of buyers in this market are at or below the median, entry-level first-time home buyers. I had a great conversation yesterday with someone who's been in mortgage for 30 years. Talked about like the different things that you'll see in different real estate environments. You know, in 20 and 21, where money is being printed and money's flowing everywhere, there's second homes and there's investment properties galore and there's vacation rentals, all this stuff, right? And when you change out of that, shift out of that into a different real estate market, it's first-time home buyers, you know, maybe the move up or the must moves, but certainly not, you know, everybody buying their second home in Lake Tahoe and Big Bear and wherever they buy them.
Yeah. Yeah, it's really interesting. Again, I think, and the reason I asked about the split is I still think we have relatively the same market. Luxury is still struggling, but entry level is where it's at. First time home buyer homes where it's at. And unfortunately, I don't know where the inventory is going to come from. So if mortgage demand does go bonkers and, you know, inventory doesn't come soon, right? Typically in a lot of the country, that's around Super Bowl. So 5-6 weeks away. I don't know what 2024 holds for first-time home buyers, unfortunately.
Right. It's going to be competitive. I think that there's no way around that. And so as a first-time home buyer, the advice I can give you is prepare yourself, because preparing yourself is free. If you don't buy, that's fine. I've got plenty of buyers that go through the pre-approval process. They get all the information. They're more educated and they're, you know, empowered to make that decision and make that move if it's the right time. But if not, no harm, no foul. But the worst part is seeing an opportunity, wanting to act on an opportunity and not being prepared for it. And so that's my, you know, call to action for anybody who's thinking about buying in 2024. It's going to be a competitive year. Whether it's hyper competitive or just a little competitive, we don't know, because we don't know how much inventory is coming. But prepare yourself. That's the best thing you can do. Greatmortgagebroker.com is a great place to start. You want to connect with me and my team, we're happy to help. We're licensed in 48 states. We're talking to people day in and day out. Even if now's not the time, if you want to prepare for something a year or a year and a half down the road, we're happy to answer questions, get you prepared, get a game plan in place.
Yeah, greatmortgagebroker.com. They're going to run scenarios. They're going to talk to you about what you're looking for. And that's what you need. You need somebody who's going to really invest in the relationship and show you what's options. Matt, thank you very much.
Thanks, Mike.